Victory.
Ladies and gentlemen, the wait is over. Caspa is finally back in positive price action, 2 cents away from all-time highs, entering price discovery. All the fudsters, all the haters, the doubters, and the naysayers have finally zipped their lips and thrown the key away. And this is just the start. The dragon has just woken up right now on top of its hoard of treasure, about to spread its wings open like a tornado and breathe fire on the entire crypto market cap list. Caspa is gearing up for some massive breakout. In this video, we're going to detail specific events that have been actually kickstarting Caspa, Moonwell, and everything else. Correlating this into our trading plans is going to take us to the next level. Because of the need for increased confidence in the Caspa sector as the Peach Fuzz Mafia was turning their back on it, being like, oh, we need to sell Caspa for Solana, etc. We've been pretty open-faced about these predictions. This is a recent tweet that we had on X where we're saying right here, December 6th. What was going on December 6th? The jobs report was released. Now, by now, if you're watching this channel, you've already made the correlation to how important FOMC data is, particularly for Caspa or other projects with strong ties to VCs, the investment banking type of class. Way back in the day when Caspa was still down here on the main channel, we said 72 hours before the original God candle, now's the time. Enter a 10x leverage trade on Caspa. That week, every single comment was like, how did you do that? You need to open a VIP. You got to show everything. So we opened the VIP at the next FOMC meeting. People think we're Houdini at this point. They think there's some kind of supernatural power going on, right? Nobody's ever been able to call it like this guy. All we're doing is synchronizing FOMC data. As we've proven in our other videos, this is Satoshi's secret. They correlated Bitcoin directly to monetary policy as a way to fight the collapsing fiat system. Kind of like an emergency parachute, if you will. And Caspa, following the, how do you pronounce that? Nakamoto consensus, it's also hooking up to the Satoshi secret quite well. As we can see, on monetary policy adjustment, it kicks off. Other projects that directly compete with monetary policy, let's take a look at Moonwell. So this is a post we made in VIP, has almost nothing to do with the fact that there's that bitty 5-day triangle there.
The shaped charge indicates that they are technically proficient.
Although technical analysis is important, but it's the fundamentals behind this triangle that are so key. What was that all about? Looking at the Moonwell chart, that was back here. We got this breakout, touchback, and then a rip to the upside. This was when the FOMC released their minutes. The minutes is the official document from the last meeting. So it's a big deal. And inside the minutes, they say, yeah, we're going to cut rates in December, releasing more money, more liquidity into the market. And for any of you guys who are completely new to this channel, explore around. Maybe watch the Caspa price prediction video and or some of the Satoshi secret videos just to get you up to speed on how this monopoly money system works. They're trying to control inflation while balancing jobs, keeping the economy going, right? That's the Fed's mandate. They have to keep people with active jobs and they have to make sure inflation doesn't go up to wazoo. So these events as they're unfolding are really important. And they create bullish catalysts because the guys who are driving the car here, and this is one of the hardest pills for retail to swallow. We start every video in the beginning with me on ESPN. Man, I had to work a lot harder on getting on ESPN for poker. That was actually my first try, but years of experience than it is. Crypto is way easier than poker. For any of you guys focused on the poker game, man, get into crypto trading, way better money. Anyway, we're at a zero-sum game table. You hear people constantly in the meme coin sector like, oh, dude, they rug us. Everything's a rug in the meme coin sector because there's no use case. It doesn't matter. It's either you're getting rugged now or, dude, couldn't you have rugged the other guys? Somebody's getting rugged. It's just, that's how it works. It's a zero-sum game. It's not like everybody shows up to play poker and they walk away a winner. Everybody else is losing, and then the winners win. We're at a poker table with the FOMC, the central banks, BlackRock, the miners, the whales, the exchanges, Gary Gensler, the whole gang. They're all sitting around playing poker with this crypto action. So acknowledging that is the first step. Step two, the biggest players, they constantly send signals. As you can see in these Satoshi secret videos, they're constantly signaling each other. So as the FOMC is releasing the minutes on Moonwell, they're saying, yeah, we're going to cut rates. When the rates are down, that's more money on the street. Everything gets higher, more liquidity, higher action. So there's actually some more important dates that are coming up before we even get to the FOMC meeting. So we already recognize, okay, yeah, the next leg up is going to be on the FOMC, December 17th. There's two more massive data drops from now to then. So here's the thing. There's tons of people in the Caspa sector making sentiment with connections, and it's often very folksy. It's not like they've done this amazing deep research. They're not really putting one and one together, and it's kind of sort of created, I don't know, like this sort of masquerade. People are like, oh, I don't know, the Binance listing coming up, Coinbase is coming. When you dig into this monetary policy information, it becomes as clear as day what's going on, what's truly driving Caspa. If you were to go around right now and ask the majority of the Caspa community, what caused this breakout? Half of them are going to give you some BS answer like FOMO or, right, trader psychology or the bull run's getting closer. Just some wing-ding folksy answer that's nonsensical. We get down to the brass tacks in here and actually do almost like an accounting for where the money's coming from the FOMC bond market into everything. We'll get into the altcoins in a second, and we'll be sure to touch base on the DEAI chart here. But let's stay focused on the task at hand, which is the title. These two massive events, and they're going to affect DEAI as well. So before this FOMC meeting on the 17th kicks off, what do we got coming up? So this is a calendar of monetary policy. What just took place was the minutes got released, and then the big one, which was just a couple days ago inside VIP, we were formulating the Caspa leverage trades, and it says right in the first line, we'll get into technical analysis in a minute, the upcoming jobs report released in 24 hours. So the minutes and now the jobs report is out. This is what the big dogs look like, and they're driving the car. Back to that poker game analogy. BlackRock and the central banks are in complete control of this bull market. To go even one step farther into the folksy, it's not just the Kaspa community. The Kaspa guys are on par, if not ahead of the rest of crypto community itself. The thing is, the majority of the crypto community gives these folksy, goofy answers like, what was the cause of the downside during the last bull run? And they'll be like, Sam Bankman-Fried. Right? The Terra Luna collapse started it, and then it was Sam Bankman-Fried. That is not correct. That is ridiculously wrong. And what that leads to is price predictions like, trust me, bro, nature. Like, let's sell at $1. That has nothing to do with monetary policy or even on-chain dynamics. From this broadening wedge breakout right around Q1, what if all of a sudden the FOMC decides to switch from quantitative tightening to quantitative easing? And then the KII's like, oh yeah, we've now got Warp Core and Gigawatt online, and the volume just rockets through the roof, which is what's going to happen at one level or another. We're going to sell at $1 just because it's a round number? So we want to get away from these folksy, almost mythical ideas and get right into the brass tacks of what actually moves the market. And the reason why the crypto community has very little connection to monetary policy, but if you trade stocks, dude, every stock trader talks about all of this stuff, all the content, all the sentiment, because you have to if you want to get any edge. Stocks is very competitive. The last crypto cycle, the FOMC went full quantitative easing, and they had 0% interest rates. So nobody had to pay any attention to monetary policy because it's on full blast overload. And then they created all these bad trading habits. Stuff that they thought was working wasn't really what was going on. So we're here to bring what's actually happening. And this isn't like some secret we developed in a lab. This is on every television station, you guys. The reason why they put Powell on there is because this is what everybody does. This is how the market works. And it's really important to hone in on it and understand it. You want to get a lot of money, you got to understand how money works. So about these two big events that are up and coming. Now, we'll be releasing inside VIP. I mean, we've been crushing it in VIP because we've been correlating FOMC monetary policy to Caspa. Before we even opened one, people thought we were supernatural. Now that the curtain's been peeled back, they're like, all right, we got to figure out how to do this. And it's a combination of technical analysis, fundamentals, and on-chain data. Like looking at that tweet, I mean, it's kind of old news now, but because of the on-chain data combined with monetary policy and a bit of technical analysis, we were able to identify exactly where to short Caspa as they were diverting money into building the on-chain ecosystem. And that's a pretty spooky, accurate prediction. That came out on like September 9th, right? But now we're on into the upside. So our group didn't get burned. like the other guys were torched. And I remember how many emails I was getting. Peer pressure is real, and it works in crypto too. We're going to jump into some. I want to do some. Have you heard that real spy guy? He used to work for the CIA, talking about what actually motivates people, but we'll get into that in irregular videos for this week. What motivates people, because the peer pressure was ripping to buy Caspa right here, but we knew it was always going to bounce off of that trend line and come back down. Anyway, that's old news. Now we're on to the December 6th breakout. We're up and running, getting ready to hit all-time highs. This is super epic. Here's the driving forces coming up this week. So inside VIP, along with our tool systems that we use, we have been studying this for a while. Right here is a bond auction. So as the federal government is selling these bonds, this is before they started rate cuts. See this massive God candle on the total 3? This is the combined market cap of every altcoin. That's all because they created rate cuts. Right here, all those peaks are directly associated with bond auctions. Here, here, and then here. And as the rates are reducing, the yields going down, it's becoming less effective. But that back there, it was very spot on. So we're go in and do this paperwork. More importantly, we have a systematic approach. So right now we have three or four printouts for a system. We've got obviously the 24-point checklist, which is just how you study the on-chain data, vet any crypto project. We've had guys come up with stuff that looked good, but once you break out the 24-point checklist, you'll realize there's way too many massive flaws. We have over 7 of them already filled out in the AI sector. The majority of them are. We've also got the classic pattern, just to add to your trading journal, like an Excel spreadsheet, but of classic patterns. And we'll get into this in a moment. This is some of that FOMC data we need to know about. 84 questions to cut, copy, paste, and ask AI. This is a companion to the 24-point checklist. People started plagiarizing this system because it's so effective. So we said, dude, if I was going to plagiarize me, I would have came up with this. It's a very helpful tool, works well with this. You just cut, copy, paste the questions and insert the project's name. And then you dig down those rabbit holes. This is how you find actionable information. You can study about any project for days on end, and it's not actionable data that you can trade from. Remember when the BOJ carry trade happened? Step, I think it's 15, identify the global focus. Just an example of how each one of these steps works in its own way. So we were looking for projects in Japan during then, like Matrix Fire, dropped down to like 50, 40 cents, rocketed back up to $2.10. Japan, connecting, all the actionable trading information here. And we've got the 5 key elements of a swing trade. What we're going to be releasing is how to analyze these FOMC data points from PCE to the minutes. As the bull market unfolds, we've only got a limited amount of time that we can keep buying cold storage right now. The last sectors to rocket, GameFi and ZK rollups. Selling is going to be our big up and coming task. And there, you want to talk about trust me, bro logic? Wait until it comes to selling, right? People are like, well, I've already made enough, so that's good enough for me, bro. I want to get the max. And more importantly, I want to do it accurately. And as we can see, based on the prior markets, it's all directly incorporated to monetary policy. This peak right here, obviously there's an FOMC meeting right there where they stop quantitative easing and they start raising the rates. Blatant, as clear as day, that's the end of the bull run. Meanwhile, people think, Sam Bankman-Fried. No. Not at all. So analyzing this is going to be important. What the FOMC is focusing on currently right now is jobs. Hence the jobs report is so big because they're stimulating the economy for the bull run. what they're going to be switching to, and this is why it's so important to start learning this tactics, methods, systems now, is so you'll have some experience with trading FOMC data. What they're going to flip into during the bull run is controlling inflation. So here's the big reports that are about to drop, and we'll break down why these are important as well. On December 10th, the distribution of personal income. What this means is it the people who have good jobs getting all of the cash? How much are people saving? Are they spending a lot of money? And they go deep down this rabbit hole. And this is one of the reasons why VIP is so important to have. We're talking about numbers, mustardy, above the shoulder stuff to really break down how this personal income data set works. We got to start putting chart by chart by chart so you can fully grasp it. So we need a different tool than audio video. We need written stuff like these posts that we have on the bonds influence on FOMC data. Personal income directly connects to this. And this is a big one, and I know you've already heard this one coming, and that's PCE. So what the first one, personal income, is talking about is how much cash are these guys saving versus how much they're spending. And this is a study that is going to show how hard the FOMC is going to cut rates. When it's just the people who are educated and smart making all the money, the top jobs are getting paid the most, the FOMC has to step up and start cutting rates. But once this flips around and your everyday layman turns around and they start buying a Lamborghini, that marks the top of the bull market. The economy is fueling. So when people are buying their Lambos, that's a clear sign. It is over. Like literally, the FOMC is going to track the Lamborghini sales, more or less. Now, this brings us to PCE, personal consumption. This is how much money people are spending. It's everything from healthcare to cars to food. And I know you're thinking right now, wait a second, Jesse, we're getting off the subject. We're getting away from crypto. It's cryptocurrency. It's money, digital money. And when it was created by Satoshi in his genius, zooming out from this Fibonacci angle, he tied Bitcoin directly to monetary policy. As you can see right here, every time the FOMC cuts rates, it's a 4 to 5 year cycle. It's called the global liquidity cycle. I can bring up another document that has nothing to do with crypto, just showing you how it runs on a 4-year basis. So this document right here is more about economics, nothing to do with cryptocurrency. And what we're looking at here is the global liquidity cycle. It waxes and wanes on about a 5-year basis. Satoshi knew all of these secrets. So every time Bitcoin halves, it takes place right around these FOMC rate cuts. This was the last time the FOMC was cutting rates on this orange one. They just cut rates right here. Fast forward 4 to 5 years in the future, it's going to be the same thing. Bitcoin halves, rate cuts happen. This way, the supply and demand fluctuations change and Bitcoin absorbs more of this global liquidity. Genius design by Satoshi. And this is very actionable for trading. So the PCE data will come out. And this has massive ties to inflation. So as the bull market is ripping to the upside, taking a look at how much groceries, taking a look at how many people are buying cars, all of these data sets, learning to read Excel printouts like this can provide us with additional information as to when the Fed is preparing to make their big move and end the bull market, because they will distinctively stop the bull market. It will keep running until they either raise rates or they alter their quantitative tightening or quantitative easing. So what's going on right now as well for Caspa that makes it enormously bullish? Right now, the Fed is still selling bonds. So they're taking cash off the street with these. This is called quantitative tightening. They're still fighting inflation right now. They have plans to stop this as put in the minutes from last week. They're planning on stopping quantitative tightening in Q1. Simultaneously, back to the Nakamoto connection, this is when Kaspa is going to do the 10 BPS upgrade, just set to capture more than its fair share of all that upside. Yes, and we have been hearing the rumors as well. Turbo might get listed on Coinbase. Personally, I don't trade meme coins at all. And we did videos 30 days ago, right after the rate cuts took place, showing we were able to beat even the top ranking meme coins on performance by using the 24-point gem hunting system. We ended up coming with the lead swing trades. Meme coins are a strange use of cryptocurrency, right? The reason why meme coins are a really fair game is the majority of crypto projects don't even get any use case. They're more protection against inflation for the market makers. We know this. Nobody's actually going to step up and use them for much at all. And this is in the 24-point checklist. When you go to step 23, this is really big on GameFi. Make sure that you test the project out. If it's a game, play it. You guys, you real OGs to this cycle that have been around for more than 500 days, you remember the GFAL hype? Did you stop and play the GFAL games? They were awful. They were like those Pokemon card collecting games. They weren't good. So definitely use every project before you buy into it and research who's actually going to use it. Caspa, the reason why we're so bullish on it, it's actually got use case. Who's going to use it? The KII? They're connected with an energy trading platform, the European Federation of Energy Trading. Fast forwarding into this bull market, let's step back. Now that we've done a bunch of fundamentals, what's driving everything, this is pretty interesting, I found. And it's a study that we'd already been talking about inside VIP in our video trading courses and everything. That's more of a pennant because it's less than 18 days. But let's zoom out. See how Moonwell? This is a VIP call out here at 73 cents. Of course, we got one in earlier at 62, but we're always adding on. So we see this clear symmetrical triangle. Caspa's also got a symmetrical triangle. Oftentimes in crypto, particularly remember when the total 3 was forming this giant secondary falling wedge, and this is part of the repeating trend line system. Because of the halving and emission schedules, cryptocurrencies create trend lines that repeat over and over again on the charts. You see these two trend lines? They're the exact same in purple and yellow. They're repeating trend lines on the total 3 altcoin market cap. And we were able to utilize this to get in on the swing low on all of these, like Render. We did this on Render, Solana, and AVAX For Render, it was get in under 5. For Solana, it was 130. For AVAX, it was 25 bucks. Those were great trades. So this started to rip to the upside, but because we have an understanding of technical analysis, getting back to the printouts, you just have to open up your Excel spreadsheet and you see, okay, we've got the falling wedge. We know it's going to do at least 150 upside. So we did an add-on trade, knowing Render was going to keep ripping. Seeing the massive resistance right here, guys in the group really liked this trade because they closed it out when they were asleep, setting take profit for 11. Now they've got dry powder to invest for these up and coming events. Leverage makes up for over half of the action in the US stock market. Think about that if you're not leverage trading yet. So we often see the point of this is these classical patterns will repeat over and over again. So both Kaspa and Moonwell were showing very similar symmetrical triangles with upside breakout. Also, this is great on Moonwell. This is awesome. So we initially recognized this was forming right around here when we put out like a really strong title inside VIP to get everybody in on Moonwell. We have our own section in Moonwell, but we use the title called same chart as Caspa, right? Back from the 2023 cup and handle pattern. Just trying to get the group members excited on this because we were so confident it was going to rip. We had Moonwell on this watch list from June for projects that we were going to rip. This is connecting monetary policy to everything. Moonwell's a very easy trade. This is that cup and handle. No, there was one from before. Moonwell's a very easy trade because it's connected to DeFi. Where's the chart? Here we go. So what we're seeing right here is a larger high-handled cup formation. You see that? And this triangle and this right here is becoming cup. High-handled cup is a formation of cups. And now there's a handle here. And we've seen this before inside of Rune. Let's go to the pattern directory here. So we have all these patterns. Rune. So this was Rune's original cup and handle. This happened at the same time Caspa did its original cup and handle back when it was under 5 cents. Let's bring up the Rune chart. And I'll show you what's going to go down on Moonwell. Okay, so that original cup and handle looks like it was nothing. It was a lot bigger back in the day, right? That was like a big chart. But now the price action's gotten so volatile, it's like just a spot. So we're getting this higher rounded bottom with another breakout. And of course, Moonwell had some on-chain issues here. We actually got everybody into a trade on Moonwell. I think it was right around 570 using these repeating trend lines. And we're still in on this one. It has strong connection to Bitcoin and we want it to get up on top of this level here with the repeating trend line system. So with Moonwell, yeah, this, and also it's on the total 3 as well. The total 3 is a gigantic cup and handle. Look at that. Let's hide the drawings. See that? You could say this is the cup, this is the handle. The cup and handle, bringing out our Excel sheet, yields on average 300 to 500% breaking upside, which is going to put us right around 4 billion when this pattern breaks out, and that's from launching from 800 billion. If we take the whole 1.1 trillion, we're looking at closer to 6 billion. So based on the technical analysis, the total 3 will reach 4 to 6 billion. And we have fundamentals to back that with the FOMC data, regulation, everything. We're not trying to do naked TA here. Caspa's got this giant broadening wedge. And when this breaks out, this is when Caspa's going to get on the map. Simultaneously, the KII, and they're the guys with all the use case for Caspa. Forget about your memes. Forget about your Trader Joe swapping, staking, games on Caspa. We'll get into what the bull run's going to hold in a second, because I've been seeing a lot of commercials on social media for the type of projects that are going to be relevant. These will be good late entries. Still getting involved with new listings for more upside. But the real use case is these guys. We hit the lottery when the KII connected with Caspa. Behind closed doors, we can almost connect this to BlackRock, who's a big owner of Marathon Digital. We can connect this to Marathon Digital in some way, I'm almost sure. Inside Discord, we released some information that the KII dropped to us about everything they've got up and coming, connecting Caspa to smart contracts through Warp Core, that whole XRP ISO 222 narrative. That's Warp Core, a product that KII is building. So really big. I'm already rich. The majority of people who do content on social media are kids, because you need a whole other set of skills. You notice how people with terrible call outs who only cover meme coins and like sell their Caspa at the bottom and buy it at the top? We don't need to drop any names, but you guys know everybody who that is. Meanwhile, we're the only ones getting it right. But for some reason, their social media skills are so great, they get all the exposure with the YouTube algorithm. I'm already rich. Not from crypto investing. We were involved in a restaurant. When I got out of high school, I joined the traveling carnival because you get a huge cash payout. It's kind of like fishing for crabs in Alaska, except for you can't fall off the boat and die. You get a huge cash payout, and the owners of the carnival were like, we're buying this restaurant chain. You can get in. And as we were pooling our cash together, 9/11 happened. So we had all this cash, and we were about to get it into a money market anyway. And so we ended up making more off the cash we put together to back the restaurant business than we did off the restaurant business. So I won't forget about you guys, though. And it's not... Thank you guys for the vote of confidence on social media. Make sure that you guys share this video with your friends and let people know where the action is at, because it helps the confidence of the Caspa community when you actually have people that can trade it and understand the fundamentals. What people don't like is heavy technical analysis. Nobody wants to understand these repeating trend lines. They want to hear why it's happening. And this is like on AVAX. They needed to divert capital away from directly on chain into building the ecosystem. This is like literally directly what the KII has been talking about doing. So right here, they get the run up, and then here's when they were building Trader Joe. Notice this massive dip. This isn't bearish. This is just showing that the big dogs are now investing in Trader Joe, building everything around AVAX for the big run. So Caspa's already got that under its belt, good to go. And it's not my intellect. Some of it's from experience. It's the systems that we use. Part of that restaurant business thing is you have to learn how to franchise everything. So I was the lead franchisor, I guess you could say, meaning that I created all the systems and checklists. If you open a Mickey D's, you got to walk in and do a checklist. Check the freezer, make sure the food didn't go bad. Make sure you got the quarters in the till. Make sure the onions are sliced. You go through the checklist, make sure everything's done. And then boom, even if you're waiting on tables, there's a checklist. Get the drinks. Would you like appetizers? Drop the dessert menu off. There's always a checklist for everything you do. You're going to launch a rocket into space or flip a burger. You got to go through the checklist, and it's the same thing for investing in crypto. So we have these systems in place with this kind of trading journal / book that you get your hands on. And it's these systems that make sure that we're always coming up with the good trades inside your printouts. So good day for the Caspians. Let's take a look at DEAI. Somebody wanted to check that out. They've been doing a lot of good on-chain data. Let's switch over to the Bitmart. They've been doing a lot of good on-chain data. We've got this broadening wedge pattern here. Now, inside the Excel printout, it's not just like broadening wedge, percentage of upside, amount of yield. There's multiple different setups. What if it's a bearish broadening wedge, meaning it's on, this is a perfect example, meaning it's got this flagpole to the downside, has totally different stats. Right? This pattern and this pattern are two different ones. This one has a bull flag. This one has a bear flag. So the average yield is 100%, meaning that we're going to get up to 160. The action's really choppy because a lot of Americans are trading this on DEXs, swaps. So it's not like they're doing limit orders exactly like they would if they had access to MEXC, because they're Americans, they're probably getting this on Uniswap. Has a lot of volume for DEAI. They've been doing a lot of on-chain upgrades recently. Let's take a look at the stochastics. So this is one of our leading indicators. We've been able to make some really spooky callouts using stochastics. For example, let me actually show you some really good stochastic callouts. Okay, here we go. So with Spectral, yeah. So this is from right before the breakout on Spectral happened. We were like, yeah, grab this right here in between 9.25 and 8.75. Why? Because it's a one-day swing low on the stochastics. And we did the exact same readout. I'm not going to dig it up right now, but we did the same readout on Moonwell at 3 cents. This indicator that we use, and we have videos for how to use it in detail, this rabbit hole goes a lot deeper. So now that you're using stochastics, make sure that you get all the insight, because it can do bull flags, bear flags, and you can get a false readout on that. So we cover using stochastics in detail inside this video. With SPEC, it's been like day and night. When the price is up, stochastics is up. When it's down, it's down. So therefore, every time the stochastics comes down, you buy. Pretty basic. And then fast forwarding, this jumped up to like 18 bucks on Thanksgiving. So it was like a one-day double up trade. And stochastics was a part of it. There's more technical analysis involved. So looking at DEAI's stochastics, we can get some more information. Let's look at the one day. Yeah, so this has been kind of doing kind of like a bull flag. What we really want to see is a full stochastic retrace. That would be sweet. And because this other oscillator is showing it's getting low, we call this a fuel tank. Fuel's running out. We might very well get lucky and see a full stochastic retrace. Here, the 4 hour kind of making a, yeah, the 4 hours got some more downside. We would be fortunate if we got a full stochastic retrace, because we'd be able to load the bag with full confidence at a discount. But it's also likely to just rechange directions and keep going. Right now, we're in one of these kind of quasi gray areas. All of our call outs like NACA at $1.05 and then again at like 135, or these recent Moonwell and Caspa breakouts, we're doing them because now's when everything's lining up. We've got the fundamentals. We know what's about to happen. It's going to be the FOMC minutes, or perhaps it'll be PCEs. And we've got the technicals. We've got these triangles. This is just showing us the market psychology. Everything's getting ready for a breakout. There's moments of absolute clarity when we're like, oh, dude, here we go. Like when we were flagging everybody down inside VIP back here at 3 cents, we were like massive cup and handle on Moonwell, just like Caspa, like load the bag. There's moments of clarity, and then there's other times like on DEA right now where it's kind of like a storm of probability, right? So right now, not a ton of clarity on DEAI. Waiting for the stochastic retrace would clear it up all the way. But overall bullish on that, definitely, as this is a broadening wedge and this kind of cupping rounded bottom put together. Congratulations, MB4 lunch. Getting in the group and getting your building your portfolio. That's excellent. Good to hear. And we've been absolutely crushing it with our call outs and trading plans. Just really good stuff here. Here's some of the later NACA ones, the parcel projects. So yeah, really, it's a really good combination of that monetary policy combined with FOMC data. Here's a great one on Tau. So we've been noticing inside these symmetrical triangles. Remember, we were just talking about when one pattern's forming, it seems to be everywhere on the charts. Symmetrical triangles are riddling charts right now, from Moonwell to, of course, our friend Caspa. We're seeing a lot of symmetrical triangles. We notice on other charts, it would be two head and shoulder patterns put together with the exact measurements. So using our Excel spreadsheet, the head and shoulder comes back 70%. And so the size of this move is exactly retraced 70%. From here to here, this is a 70% retrace. Guess what? Breaks out again, does another head and shoulders, exact 70% retrace. So here's our symmetrical triangle. Let's take a look at the Tau chart. There we go. And you get your breakout right there. So these angled trend lines, this is that repeating trend line system on Tau. This is spooky, creepy how this works. The fundamentals behind it, this isn't some trust me bro, put the Fibonacci at an angle. It's the halving and emission cycles affect crypto so much, it creates these repeating trend lines. We posted this angle Fibonacci and VIP right here, bounces off the top of the golden pocket, support, resistance. Look at this, holding it back. Where'd we get that from? We just cloned the last one, which held it back massively here, bit of resistance here, and then this massive downward price channel. You see that? And then you've got your wick off, breakout to the side, and then we're in a new one. And that's the exact same thing that we have on the Caspa chart with these white and yellow lines, starting from all the way back here, including that blue line, which is the original y-axis. So it's a great addition for you guys that are really into technical analysis. Definitely want to check out Group to get your hands on the videos and all the trading plans on them. It's really, after being up for so long, it's just a history of all the best call outs, what we were thinking, what was going on inside of our head while it's happening. Looking at one, so we go over the repeating trend lines, how they're affecting it, the classic patterns, and then you can collect this and you're flying right over to this printout. I thought that was going to link us to a video, but sometimes they do link to videos. And then we got the summary and the prices and our projection level, and it's spooky accurate. Really good stuff. Good question, Scooterville. So now we're going to take a look at all this trust me bro narrative, right? Because everybody lacking monetary policy, lacking Satoshi's secret, they haven't been able to come up with what's really moving the crypto markets and what we really need to watch out for with Kaspa, Moonwell, and everything else. But we can. So with the quantitative easing, we're going to have to bring up a new chart here. Okay, good. I got it on the first try. So we all realize at this point that the FOMC is cutting rates, and that's pretty easy to digest, even for people that are new to this, because you're like, okay, yeah, if the rates go down, that means that money is cheaper. Hence, GameFi as a sector will start going up when interest rates are low. It's a really multi-dimensional system that the FOMC uses to control the markets. When they're stimulating right here, they're cutting rates, but what they're also doing as they cut rates is they're doing what's known as quantitative easing. This is during the last cycle. So we were looking at those bond markets. This is the Fed selling bonds. That means that they're going to BlackRock, State Street, and there's all the big VCs, all the big players that drive this market, and they're saying, we're going to give you 5% on that $20 million. So in 1 year, you'll get 21 million. And they say, done. We'll take it. They're selling bonds right now. This is called quantitative tightening. It is not bullish, but it's been slowing down. What's been kickstarting the bullish action is the fact that the Fed finally decided to stop cutting rates and saying, that's it, we're not going to cut rates anymore. So the last time that they hiked rates, or excuse me, hiking rates, the last time they hiked rates was right here. And it caused the final sell-off, creating this double bottom on the altcoin market cap. We were shorting all of social media, from altcoin daily to crypto rank. Did I say those backwards? They were going long. They were saying it's altcoin season, and your favorite content creators, if you go back to here, were mistakenly buying. This crushes your gains. You really need to buy the low with monetary policy. So while we were shorting, we turned around and then longed the bottom, right? We were buying here. Nobody was doing that. And of course, it varies for different projects. Like we were buying Caspa. Obviously, you wanted to get in even earlier, you would have got in even cheaper, but we got in around here, which is still pretty good. Not as good, but it's just a rule of thumb. The understanding of monetary policy makes it way more effective. So that's what's been stimulating this round of action. Let me show you what halted the bull run while we have this open. Not only does the Fed start hiking rates, see, this is the 1 year treasuries. So during lockdowns, they go boom, rates are now at zero. Money is free. You can borrow all the money that you want. This is why nobody in crypto is using this. This is why all of the fundamentals are this really honky, folksy exchange listing over dominance. Like everybody's like, it's going to be on an exchange, and that's the only thing that we can figure out that's going to make it go up. And that's just a secondary indicator. That's no big deal. They go hand in hand together. Really. An example of that is on DEAI. We were just talking about this, inside of our group, see this? They're listing it on MEXC. That's huge. They listed on Gate.io. That's big. But guess when it takes off? Right when they do rate cuts. You see that? So these are secondary catalysts. The big bad catalyst is quantitative tightening being stopped. So they cut the rates, everything kicks off. They start to, this massive spike is now, instead of them selling bonds, they're buying the bonds. So BlackRock, Jane Street, during 2021, they've got a big pile of bonds and they're saying, give us your bonds and we're going to give you the monopoly money, fiat. Here's your cash. And they need to protect that cash from inflation. They know this game. They know about money, hence they get rich. And then they start jumping into all the cryptos, from Bitcoin to you name it. And you can see it's not just that, it's also stocks. Tesla. This is all peaking right when Bitcoin topped. See that? February 10th. That's Tesla. Right? Is there a Tesla halving? Because why did that top exactly when Bitcoin did? Right? There's February 20th on Bitcoin. Right there. 10 days aside from Tesla. And it's all because of the quantitative easing. And then you can go down this rabbit hole for when to sell a top. Let's just answer your question and abbreviate this. What's happening right now is they're slowing down quantitative tightening. So they're not even doing this bullish. They're still taking money off the street. They're still selling the VCs at this poker table bonds, high rate bonds. They will stop doing that in Q1. That's going to create one of these things, a flat line. This means that there's a massive amount of capital on the street that these huge investment entities who are on one part more interested in protecting the capital they have, and then it just naturally grows. We're talking about billionaires, trillionaires here. They've got so much cash, they need to protect it from inflation, and this is what causes the bull market. So things will really kick off in Q1, not because of the Coinbase and Binance listing directly. Those will be a secondary catalyst. Yes, it's very important to get the Coinbase and Binance listing to up the volume, but the reason that they're waiting isn't like the rumor around the water cooler. They're saying, oh, we need to investigate the on-chain data. What they're waiting for is quantitative tightening to stop. And then this massive flow of cash is going to start pouring into crypto, specifically Caspa. Make more sense? And utilizing this, you will be able to sell the top, because during the last crypto market, the top was clearly marked by two indicators that we've just been talking about. Right here, that's Bitcoin. There was an FOMC meeting that week where they raised the rates just 25 basis points, but at that poker game, that's a signal. This is it. We got to start doing flippity flop on all these upcoming things. We got to start pulling back. We got enough jobs. We gave these guys so many good jobs and they gave these guys so much money. They just noticed, guess what? Now they're buying Lambos. Okay. Once I buy a Lambo, the Fed steps in and they're like, this is done. Stop. And they will stop the Lambo purchases right on the spot. And another way that they kick this in is they go from quantitative easing and then they switch to quantitative tightening. Okay. They start to slow it down and then flip it. So recently they've been gradually easing the curve, and pretty soon it's going to go laterally. And those are going to be the biggest catalyst of the year, hands down. They might delay it till April too. It's in the FOMC minutes. And if they delay it till April, that will without a doubt prolong the bull run. It will make the peak that's coming later. People are like, I'm going to sell on Valentine's Day, right? Or I'm going to sell at this dollar. You got to lock into this, man. This is it. This is it. And the farther down this rabbit hole that you go, the more clear it becomes. It's cryptocurrency. This is money. Pullback, I'm assuming that you're talking about Caspa here. So we already got the bounce off of this x-axis right here. So when you pass an x-axis resistance, you'll often get the bounce from the top side. And we go over this in multiple different trading plans. This is in part of the wick-off breakout method, particularly if there's a classic pattern like a triangle involved. You get out, you get on top, and then you bounce off the top. Do we have that on Moonwell? Right now, we might. A pullback could come on personal income. See, we're leaning towards these being bullish outcomes. We're leaning towards, oh, dude, right now, we're saying only the guys with a really good education are making the most money, and everybody's saving money right now. When this data comes out, it could say something different. It could say, oh, dude, everybody's got a ton of money and they're spending it. Nobody's saving any money. That would be bearish. That would be a pullback catalyst. And then there's the PCE. Inflation could be a little out of control. The PCE could make the Fed nervous, and that would cause a pullback. But we're leaning towards these being bullish, looking into the lagging indicators. You can flip on and get some other opinions. Just watch that really above the shoulders mustardy financial TV. And you'll finally start to understand after watching this videos what they're talking about. Bloomberg, the Bloomberg YouTube channel, that's a good one. In terms of getting a pullback on technical analysis, we always tell people this in VIP. You open your statistics and at least look for like a 1 hour pullback. See this? This is just the simplified version. We have more detailed video explanations and in trading plans, but when you get the statistics pullback, this is an oscillator, means it swings like a pendulum. That's a swing low. See that? So right now we're at just on the 1 hour chart, a stochastic swing high. I would, and as a rule of thumb, I only buy stochastic swing lows on at least the 1 hour. I mean, there would have to be some massive catalyst for me to buy a stochastic 1 hour high. So you got to wait this out 48 hours and see until this line comes back down. Reassess the situation stochastically or on the charts or whatever. And it looks like we did get stopped at the big resistance that we've been saying we would, which is this 18 cents level. 20, we're going to cut through like a hot knife through butter. And the real line to cross is 25. So once we're over this 18 and a half, that's it. It's gone. So another way that you could do this instead of waiting for a pullback is if we get on top of 19, it's over. I mean, we're going to just blow right up really fast. So that would be my best advice for pullbacks. You're welcome. Pretty interesting stuff, huh? You can go to college for this, become a master in it. And I actually learned this from Roaring Kitty. You guys saw that movie, Dumb Money, about the GameStop connection? I was in Wall Street Bets. This is an add-on to my GameStop position. I was in GameStop since the earnings report 90 days before it ripped to the upside. And I found that guy on the internet. He was the leading GameStop content creator. So we added on to our trade. That was January 13th, like right here. We were like adding right here. Bonk. Okay, at like $5. So we catch this breakout. That was a stochastic breakout because you can do this with day trading. The majority of content creators, we stick them in the stock market and just have them buy and hold. Without the 4-year crypto cycle, they will all get wrecked. Riggedy, wrecked, son! We used to play poker all night because the stock market opens at 4:30 Vegas time. Play poker all night and then just roll right into the stock market and day trade. That's what was going on when I was in the whole Wall Street Bets community. So we're chatting with Roaring Kitty, and they never talk about this in the movie, or you never hear about it. But one of his massive insights was this big bond unlock. Knowing that it was, these are the 1-year treasuries, looking at this. So this is the Fed's balance sheet. This is how they control fiat money, that whole printing money. Once we went off the gold standard, we went into this goofy stuff. So they print the money, but they think it's cool to print it because they're just going to hold it all, right? That's the global liquidity cycle. They printed it up the wazoo, but they keep taking it out of play and then putting it back on. You see what I'm saying? So it's like rich and poor, in and out, in and out. And this, knowing about this is how you're going to get really rich. All right, because everybody who just watched this video, even off the knowledge that you learned, it'll be easier for you to get the bottom. Take it all the way. Join the VIP. Everybody likes it. We're rug free. We don't have any bad trades. We're up and rocketing. The one that was preventing me from saying this was a new listing. We had this new listing that's just recently gotten back up. With new listings, you're taking a bit more risk. It was this super high volume one, DeFi. But now that that's finally caught up, all of our stuff is rock and roll. We're winning on everything. And a lot of times we end up with the best trades because of this monetary policy stuff. But anyway, looking at that chart, it shows what the Fed's holding. So see, their biggest holding is 1 year's. It's 1.2 trillion. It's the 5th one from the top. 10 years is the biggest. And then the 1 year is the next. Knowing how this stuff works because he went to college for it, Roaring Kitty saying, when these 1 year bonds unlock, everything's going to rocket. And he kept telling us to wait for Valentine's Day. Just wait. And it ended up rocketing to the upside a bit before. And it's very hard to take profit off of charts like this. So you guys that are going crazy in meme coins, that's going to look great on the screen and have a lot of fun. But you want something that you can predict and sell the tip of with ease. You know what I mean? Not a big fan of meme coins, but it is a strong narrative. It attracts new investors in, right? They're like, oh, this sounds fun. We're playing a zero-sum game, right? I'm going to get in early and wait for everybody else and then dump on them. That's the meme coin game. It's kind of out there. But you can do better getting into quality projects. You can buy larger sizing. All these guys like, oh yeah, I got the 12x meme coin rip. How much did they have in it, right? Obviously a very minute amount of their portfolio. Plus they missed, a couple other ones along the way. So you got to average that in. You know what I mean? But yeah, this stuff is great. So we're going to come up with a new tool for VIP this week and more trading plans for as these other data sets come out. Right? This was our good trading plan for the FOMC minutes. And then we had the Caspa trading plan based on the jobs report. Like we just told everybody on Twitter it was going on because, right, we needed to restore some confidence in the community. And there'll be a load of new trades combining everything together. Awesome. No, Trish, Roaring Kitty went to college. He works for a stock company. He worked for like Merrill Lynch or something. He was like a stockbroker type during the day. You should watch the movie. It's called Dumb Money. It's really, really a good movie. And it's a shame that they don't include this, but it wouldn't be really quite as entertaining. And it's very hidden in plain sight. Satoshi's secret in this monetary policy. It's on every single television channel, you guys, right? This guy, he's on TV all over the place. You can even go deeper down this rabbit hole and say that the news anchors that cover this stuff, they always pick like the ones that are less attractive, right? They're like, weather in a minute with this beautiful person. And then they're like, in the meantime, this goofy looking old guy with droopy ears is going to start talking about monetary policy. And everybody's like, change the channel. I don't need to see this. This is where it's at, man. This is where it's at. So you can finally start watching TV and you'll be doing research. So we're coming up with some new tools to add to the printouts alongside the trading plans, which always incorporate macroeconomic trends, right? From the Caspa leverage trading plan, first line is jobs report in 24 hours to this Moonwell trade where we're saying FOMC minutes. It's right in the title. Knowing that people that are just looking at the title, right? So FOMC minutes, it's all based in fundamentals. That's how you beat the market. And this is cryptocurrency. So the money is the fundamentals. All right, guys. Thanks for checking out this video. Congratulations for everybody that made it through the storm of naysayers. We'll catch you on the next one.
Read Sun Tzu, The Art of War. Every battle is won before it's ever fought. Think about it.